So what if the crypto race is already over? What if the winners have already been picked, not by the market, but by a single piece of legislation working its way through the US Senate? It's a pretty explosive claim that's been making the rounds, and today we're going to break down exactly what the source material is saying. Let's get into it.
The winners have already been chosen. I mean, that one sentence is the whole foundation for this entire theory. It's a really bold statement, right? It's basically saying that behind closed doors, the future of crypto is already a done deal. So, what's the evidence for a claim like that? Let's dig in.
Okay, so the whole argument really comes down to a new Senate draft bill. According to the source, this bill is setting up a protected class of just eight crypto assets, and there's a hard deadline for it all to be finalized, January 1st, 2026.
Now, the secret sauce here is supposedly a change in legal status. The source claims this bill will officially reclassify a select few cryptocurrencies as commodities, like gold or oil. And if that happens, it would be a total game changer, basically giving them a shield from all the regulatory drama that's been plaguing the industry for years.
To really get how this is supposed to work, we've got to talk about a key legal idea that the source says is buried deep inside this bill. It's the creation of something they're calling a non-ancillary asset.
So what in the world is a non-ancillary asset? Well, think of it like this. A lot of cryptos have this legal baggage from their initial sale, which can make them look like securities to regulators. The theory is that this new category would just snip that connection. It allows the asset to be treated as a pure good, a commodity, totally separate from how it was born.
And you can really see the two paths here. On one side, you have your regular assets, still tied to their investment contracts, always looking over their shoulder for the SEC. But on the other side, this non-ancillary status is like a safe harbor. It's a clear, legal lane to being treated as a commodity, completely out of the SEC's territory.
So how does an asset get this golden ticket? Well, according to the source, the bar is set incredibly high. It's not just about popularity. The asset absolutely has to be the main thing inside an ETF, an exchange-traded fund, that's already trading on a national exchange by that 2026 deadline.
Okay, so that's the big question, right? Who could possibly make the cut? Which crypto assets are actually on this list? Well, according to the source, there's already a very short list of contenders who meet these pretty demanding institutional-level requirements.
And here they are, the supposed list of winners. The source points to Bitcoin, Ethereum, XRP, Solana, Hedera, and Dogecoin. Now, what's interesting is that the source calls this group the Elite 8, but as you can see, only 6 are actually named here. The argument is that these are the ones with the infrastructure in place to meet those strict ETF rules. Now, according to the source, this isn't some backroom deal picking favorites. It's all about practicality. These assets have apparently done the heavy lifting already. They've got futures markets, they have institutional-grade custody solutions, and they already have ETF applications in the pipeline. They're basically ready for the big leagues.
So, how is all of this actually supposed to happen? The source argues that this isn't just one bill coming out of nowhere. No, it's the final step in a carefully planned legislative process that involves two major pieces of legislation.
So here's the roadmap, as the source lays it out. It starts with something they call the Genius Act, which they claim is already law. That leads us to today with the Clarity Act in draft form in the Senate. And it all comes to a head on that January 1st, 2026 deadline. All right, so the first piece of this puzzle, according to the source, is a law they call the Genius Act. The claim is that this legislation has already passed, and what it did was move stablecoins under the control of banking regulators, and crucially, away from the SEC.
And the second and final piece of the puzzle is this Clarity Act. The whole point of this bill, as the source describes it, is to finally draw a bright, permanent line in the sand. It's meant to clearly define who's in charge of what, the SEC or the CFTC, and get rid of all that regulatory confusion that's kept the really big conservative money on the sidelines.
So why go through all this trouble? What's the real endgame here? Well, the source is crystal clear on this. It is all about giving big institutions the legal certainty they need to finally open the floodgates and let their capital pour into crypto.
I think this quote really nails it. The argument is that this legislation isn't really for you and me. It's the official permission slip for the giants, the BlackRocks and the Fidelities of the world, to finally and safely get in the game in a massive way.
And we're not talking about small change here. The amount of capital supposedly at stake is just mind-boggling. We're talking pension funds, university endowments, sovereign wealth funds, trillions upon trillions of dollars that, according to this theory, are just sitting there, waiting for the green light from regulators.
And the key here is something the source calls job risk. I mean, put yourself in the shoes of a compliance officer at a huge firm. Investing in a legally murky asset is a massive professional gamble. This legislation, if it passes, would supposedly turn that career-ending gamble into a simple, boring procedural decision. Okay, this all sounds pretty huge, so you're probably thinking what I'm thinking. If a change this big is right around the corner, why aren't the crypto markets just exploding right now?
Yeah, this is the million-dollar question, isn't it? If trillions are about to flood into just a handful of assets, why aren't prices already on the moon? Well, the source has a very specific theory to explain why things are so quiet. The answer, according to the source, is that different players are watching different clocks. You know, the average retail investor might be glued to the one-minute price charts, but the institutional smart money, they're watching the legislative calendar. The theory is they're in a quiet positioning phase right now, just accumulating assets before the laws are signed and it all becomes front-page news. The source uses this great metaphor to describe what's happening. While most people just see a lot of dust and noise, everyone else is still digging, the argument is that the foundations for a massive skyscraper are already being poured. The real structure just isn't visible to most people yet. And so that really leaves us with a provocative choice, doesn't it? Is the real action for crypto happening in the chaotic day-to-day price swings, or is it happening in the quiet halls of Congress? This theory claims it's the latter, and if it's right, well, the whole landscape is about to change forever. The only question is, what are you going to be watching?